When is the right time to convert your LLC to the next level, to the S Corporation? That's what we're covering today. What's up, guys? Mike back at it again from Ledgerly, bringing you the latest and greatest tax strategies alongside my partner in crime, Andrew D'Amico, also a CPA. Today, we're going to be breaking down one of the biggest questions that we get all the time. When should I convert my LLC to an S Corporation? So if you're a small business owner or solopreneur looking to take your business to the next level and pay less in tax, this one's for you. Make sure you bang that subscribe button. Welcome to the Ledgerly family. All right, let's start with the basics here, folks. The S Corporation is not a type of business. Instead, it's actually a tax election. So you're still going to maintain your integrity of your LLC. Instead, you're just going to be taxed on Form 1120-S as an S Corporation. It's going to be a separate tax return now, okay? So yes, it's going to be another tax return. Yes, you are going to have to pay more money out the door. But what we're going to get into is making sure it is the right time for you, which I know you're going to freaking crush it, to take your business, again, to the next level to save those tax dollars. So when should you convert? Number one, our rule of thumb is when you're consistently netting $50,000 or more in net income. We're going to get into a couple case studies after. So once you're clearing at least that $50,000 in net income, the S Corporation status is going to immensely help you and legally reduce that self-employment tax, that FICA that we all know and love. What the FICA? Get the FICA out of here. We hate FICA. We want to minimize your FICA, and we want to split that FICA from salary into distributions, which we're going to go over. Number two, we want your business to be booming. We want predictable income. We want predictive profitability to make sure you are in good shape to maintain that S-Corp compliance. I put businesses booming. I think you guys get it. All right, number three, payroll. Now, a requirement with the S Corporation status is you, the business owner, are required to go on payroll for the amount that you pay yourself that you're taking out in distributions. So what this means is either engaging a Gusto or an ADP or a Paychex, QuickBooks Online, and maintaining payroll. Now, payroll, it's going to be a cost out the door, but the goal is to make sure that those FICA tax savings is going to be greater than what you're paying for that 1120-S up here and for your payroll. So now your payroll, you're going to go on W-2, and then the other side of the coin is the K-1. The W-2 pays the FICA. K-1, no FICA. FICA is bad. Number four, you're ready to maximize retirement. And what we love to utilize here is something called the Solo 401k. And if you want to learn more on the Solo 401k and maxing out retirement to the next level, video is also in our YouTube page. All right, let's go to the whiteboard here. We got three different businesses here. We got a landscaping business, an e-commerce business, and a law firm. Now, landscaping businesses might have more expenses. Their margins aren't as good. The e-commerce business might have better margins. The law firm might have almost no expenses. So what we're going to do is we're going to assume they're bringing in the exact same amount in gross income. We got 300,000 here, 300,000 here, 300,000 here. Now the landscaping business has more expenses, 250,000 expenses. E-commerce, 200,000 expenses. Law firm, only 100,000. Okay, so they are netting respectively 50,000, 100,000, 200,000. Cool. What did we say before? Our starting point for our S Corporation conversion would be $50,000, which is our landscaping guy right here. Our landscaping guy is going to be our floor of what we want to convert. And here's why. That $50,000 is going to pay that self-employment tax, that 15.3% FICA, double FICA, employer-employee version of FICA together, 15.3%. That FICA is not federal income tax, it's not state income tax. This isn't talking about federal and state income tax. We're talking about FICA, self-employment tax, which is going to equal $7,650. Now moving up the chain, $100,000 in profit for the e-commerce business. They are going to pay $15,300 in FICA. And moving up the ladder for the law firm, they're going to pay $30,600 in FICA. And we're not even talking about federal and state income tax, people. This is just FICA. Okay, so how do we limit this FICA? Well, how would you guys like to pay these numbers instead? Instead of $7,650, want to pay $3,800 in FICA? Or instead of paying $15,300, would you rather pay $6,000 in FICA? Well, instead of paying $30,000 in FICA, how about $10,000 in FICA? Well, Mike, where are you coming up with these numbers? Like, is this even real? Is this even legal? Dun, 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 dun. The Payroll Matrix, made famous by Mark Kohler himself, CPA, best-selling attorney. We're in his network. The guy's kind of cool. We like him a lot. He's got really good hair, not like me. But anyways, Mark Kohler has come up with this Payroll Matrix. So what we do is we lock in your net income. Now, full disclosure, your salary is not going to be based on your net income. It's going to be based on what you pull out. Now, if you want to learn more on that, go to our how to base your salary, how to base on your distributions. It's going to be based on your distributions, okay? Now, we talk about that in a lot of other videos. For simplicity's sake, we're just going to talk about net income for this video to make it easy. So, if we go to the Payroll Matrix, our good friend, the landscaper, profited $50,000 in his business, right? You got that there. 50,000. Now, if we draw the line upwards, boop, 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 $25,000 will be his W-2. Now, the FICA is paid on his W-2, not the K-1. So essentially, he's going to have a split of W-2, K-1, it's going to be 50-50. So it's going to be $25K for the W-2 and $25K for the K-1. Now, the K-1 avoids FICA, right? So we go back up here. The FICA on the $25,000 is this $38,000, which is a 50% tax saving. So he's only paying $38,000 and he's saving $38,000. Okay, let's move on to the next person. Now, see, as we are increasing here, look at this. As income goes up, boom, 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 what's happening? The payroll as a percentage is going down. See? Which means your percentage of FICA is going down. So next, let's take our good friend, our e-commerce business here, profiting $100,000. Okay, let's make some room. Boop. Okay, so $100,000, according to the matrix, it's going to be a $40,000 W-2. So it's going to be a split. W-2, K-1. W-2 is going to be $40,000. K-1 is going to be $60,000. Guess what? The K-1, no FICA. Yeah, love it. $40,000 W-2, that's going to be this number up here. So instead of paying $15,300 from the net income, now he's paying $6,100. And guess what, people? That's like a $9,000 savings. That's massive, okay? So we're crawling, we're walking. Now let's frickin' sprint to the attorney over here. Our attorney friend is kicking some major booty over here, profiting $200,000. Very cool. Love that. So let's go down to our payroll matrix. And according to our crystal ball over here, 200,000. Check that out. $70,000 W-2, which means W-2, 70,000, K-1, 130? Yeah, 130. I couldn't do quick math. 130, no FICA. Love it. No FICA. Okay, so $70,000 in FICA. $70,000 would be taxed on FICA, which comes out to $10,000. 710, okay? Guys, that's like a $20,000 tax saving. So check this out. We just ran through all these scenarios here. Our guy over here, our landscaper, he's saving $3,800. Our e-commerce business, he's saving about $9,000. And our attorney is saving $20,000. Now, as you can see, you can kick some serious ass with this S-Corporation. According to the payroll matrix, right, like we said before, as profits increase, the percentage of payroll decreases, meaning it's less FICA. Now, let's pump the brakes. We're looking at this as the glass is half full, and that's how we want to look at it. But the S-Corporation isn't always the right move, just yet. If you're still ramping up, you're still building, inconsistent profits, you're making less than $50,000 per year, you're not ready to commit to those additional payroll costs, the additional S-Corporation tax return costs, the compliance, the accountable plan, all those other headaches that come with it, the S-Corp isn't for you just yet. So once you convert, you got to make sure you're staying on top of these things. You're on your P's and Q's, you're dotting your I's, you're crossing your T's. Now, if you do want to convert, we got to make sure we're filing Form 2553 by March 15th. If you forget to do it by March 15th, we have to do a retroactive rev proc. after the fact, a late election. Now, very important, Andrew actually just did a video on the LLC and having the LLC as S corporation insurance. If you had your LLC last year in 2024 and you're kicking ass in 2025, you can go back as of January 1st to backdate the entire year. But if you don't have an LLC in 2025, you can only do your S-Corp election as of the date you fill out the LLC paperwork. Very important. So should you convert? Now you might be looking at this video like, oh my gosh, I'm going to end up like Mike, not have any hair. This is so stressful. Don't worry, people. We do the heavy lift for you. Everyone's situation is different, but if you are engaged enough, you're watching this video, you're ready to take your business to the next level, I know you're going to be the greatest S corporation business owner out there. So make sure you like, comment, subscribe, hit us up for a comprehensive consult, get your books in order, and let's make sure we're doing that retroactive S Corp election before time runs out in 2025. We'll see you on the other side.